Creamer Media's Mining Weekly is interviewing Boipelo Lekubo, the financial director of Harmony Gold, which has just reported superb half-year financial results, accompanied by the declaration of a record half-year dividend. Boipelo, it's great to chat to you. There's so many highly positive aspects about Harmony's latest presentation. But what, in your view, should be the biggest overall takeaway from these stunning results?
Hi, Martin, and thank you for having me. Yes, indeed. I mean, we had quite an exceptional set of results. And I think for me, the overall message is that we've achieved what we said we would. I mean, if you look at what our strategic pillars are, firstly, looking at safety, we're recording improved safety performance with a lost time injury frequency rate of 5.19. We've increased our underground recovered grades with margins coming up. We've added quality ounces, firstly through Mapkotsong, and now with the approval by the board of the extension of Mponeng. You've already touched on the record interim dividend, so consistent with our policy and overall growth strategy. And then, of course, from a balance sheet perspective, net debt to EBITDA at 0. So a robust balance sheet, currently sitting at a net cash position at the end of the period.
And Boipelo, some of the percentage increases of free cash flow were simply sky high. What, in your view, is the one that deserves the most focus?
So the operating free cash flows were largely driven by the higher recovered grades, certainly, and of course, the higher average gold price that we received. If we look at our underground high-grade operations, which is Moab Khotsong and Mponeng, they contributed around 45% towards group operating cash flows, and Hidden Valley, on the other hand, 25% of operating free cash flow. So yes, certainly, you know, our new acquisitions and what we have in Hidden Valley were the real main drivers behind that performance.
And talking about gold price, is your gold price hedging policy bearing fruit?
Definitely bearing fruit, Martin. As per policy, we hedge to lock in margins, so we do not speculate with the hedge book. As you all know, commodity prices are cyclical, and we believe that if we're consistent with our methodology, it will deliver the desired outcome. 80% of our production is unhedged, so that offers good upside with increases in commodity prices. And in addition, our hedge is done over shorter periods on a rolling basis. So it's working quite effectively as a financial risk management tool, and we believe that we are well protected by the hedge should gold prices reduce in future.
And the go-ahead for the extension of Mponeng gold mine is impressive. But what grabs one's attention is that this will be self-funded. How much funding will be required and over what period?
So we estimate around 7.9 billion rand in project capital over the life of the project. If you look currently at Mponeng generates 1.9 billion rand in operating free cash flow, and that was just in this reporting period alone. So at an annual estimated capex of $1 billion, or call it $50 million, this project is affordable and at a low capital intensity. Obviously, you know, given the current capex, as I say, capital intensity is manageable, and Mponeng will be able to fund it out of operating cash flow.
And what can be expected from Moab Gold Mine and the surface gold mining activities, which are fairly large at the moment?
Yeah, so with Moab at the moment is the extension, which we refer to as Zyplots. So that project is progressing well, and the next milestone will be the start of the decline sinking, which we expect to commence within this quarter. So with regards to our surface, you're well aware we're currently busy with the extension, Mine Waste Solutions extension, which we refer to as Career Run. There was a rainy season, but that did not affect the project schedule too much. And good progress is being made on the project due to the late arrival of the rains.
And how valuable is it to have these half-year uranium and silver byproduct credits?
Yes, I mean, with uranium, we saw roughly a 45, just under 45% increase in the price, and production increase as well, just a little over 37%. So of our total revenue for the half year, we had around 435 million rand worth of uranium sales included. From a Hidden Valley perspective, which is, predominantly where the silver credits come in, there again, prices seeing 26% increase in price. From a production perspective, just under 70% increase. So included in revenue, just under R1 billion coming in from silver. So they're both very valuable in terms of the contribution to that revenue line.
You've now also building a copper footprint. When will copper come into play?
So we're currently busy with the EVA feasibility study update that continues. Activities are consistent of resource drilling and data gathering to inform the study outcomes. So we're looking, towards the end or rather during this calendar year to come back to the market with that update as well as CapEx figures. We're proactively managing discussions with the Department of Environment and Science just around environmental permit amendments and pathways just to progress that further. Obviously, on the other hand, there's the Wafi-Golpu project. So at the moment, in the run-up to the PNG conference held late last year, December, government was very focused on finalizing all the various Porgera mine project agreements. So the state negotiation team was fully engaged in that. And with that now being finalized, they announced, to restart capacity towards progressing the Wafi-Golpu discussions again. So we're quite confident and, continue being engaged with the minister to get those negotiations going.
And talking about Papua New Guinea, I've seen some things flash across the media which look like there's certain disruptions in Papua New Guinea and there's some community troubles. Are these impacting negatively at all on Hidden Valley in any way?
So no, Martin, our operations have not been affected by these activities, and it's also not expected to have any negative impact on the Wafi-Golpu permitting negotiations.
And how much, when I'm talking power generation and energy, how much self-generation of clean energy is taking place now, and what can be expected going forward?
So our phase 1, which was 30 megawatts, is fully integrated into our Tshepong South and Tshepong North operations, and that is generating green electrons as planned. Phase 2 construction that we expect to commence in FY25. There were some delays there. We have the first phase of that, which is 100 megawatts, and that will utilize with the proceeds from our green loan. And that will be constructed near Moab Kotsong. And the second phase of that will be an additional 37 megawatts through a PPA. Phase 1 will reduce our Free State peak demand by 20% and group peak day demand by approximately 6%. So that's about 30 out of 500 megawatts. And phase 1 and 2 together will reduce group peak demand by about 30%. So call that 167 out of the 500 megawatts. And,
it's great to grow green energy because we've got to do that. But is there also a business case? I mean, is it going to save you money on energy?
No, absolutely, Martin. I don't have the figures in front of me, but just if you look at in terms of the peak demand, the savings there, I mean, phase 2A that we're building on balance sheet, the repayment on that is fairly quick. We're talking around 4 years. So we'll definitely start to see the benefit of that on the bottom line.
That was Creamer Media's Mining Weekly speaking to Boipelo Lekubo, the financial director of Harmony Gold.